Hey everyone, it's Michael Valtos from Orderflows.com, and this is the Orderflows market analysis for Wednesday, July 12th, 2017. And wow, what a day it was. Dow rose to a record high close, basically following Janet Yellen's congressional testimony. Basically, she signaled that the Fed will gradually tighten policy and gradually unwind its massive balance sheet. And in a nutshell, saying she expressed that the Fed will gradually raise interest rates. So of course, that will depend on her still being there. I think there was a question asking if she's going to give another testimony or she'll be around next year. She said she doesn't know. We'll wait and see what that's going to happen. And you know, her dovish tone sort of alleviates some of the concerns over the recent dip in inflation. But coming into this testimony, you know, I think people were a bit worried that she's going to be a little bit hawkish, and she wasn't. Basically, she said exactly what the market expected, and the market was happy with it. You know, that's why we rallied. So before we jump in, brief disclaimer: this presentation is for educational and informational purposes only. Should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, you know, I do talk about, just now I'm talking about Janet Yellen. I'm not an economist. I don't claim to be an economist, but, you know, that's the market moving news, and you got to be aware of things that can impact the market. Now, yesterday, right, you had the Trump Jr. emails released by him that caused the market to sell off. You know, that's not something that you can predict. Oh, you're not going to predict that Donald Trump Jr. is going to release his emails and get a market reaction the way you did. But today you do have, on the calendar, congressional testimony from Janet Yellen. It was expected, so eyes were watching that. And, as she's talking and saying stuff, you could parse it out and understand, maybe, she's not being as hawkish as you would expect. And, that's why the market caught a boost. So, you could, I don't say anticipate it, but, it's not there. It's not catching you off guard. Okay. Now, if she come out and if she said, well, I'm going to hike one more time between now and the end of 2018. Okay. But, she's not really saying anything earth shattering. She's got, basically her interest rate thoughts are, it's kind of neutral, right? So it's not necessarily encouraging economic activity, and it's not discouraging economic activity at the same time. So she wasn't very hawkish, and she was a bit on the dovish side. So anyway, again, I don't claim to be an economist, but I still look at the news and how it affects the markets. You still have to take that into account. Things like the emails yesterday is totally unexpected, but things coming into this day, that you got this, and so you should be attuned to sort of reading the information as it's coming along. You don't have to watch her testimony or anything, but just understand that that's what's moving the market. Like yesterday when the market sold off on the Trump emails, everyone's wondering around, well, what the fuck's going on? Why is this market selling off? It's not till a bit later that once things calmed down and the market started rallying again, that it sold off because of this. Back when I was in the bank, and stuff like that would happen, and you'd be getting calls from everywhere. The sales desk would be calling the traders, hey, what's going on? And can it be this? Can it be that? Yeah, it can, but until all the dust is settled and the market settled down, that you say, yeah, it was that. But now they got all these algo, these hedge funds. Some of them got these these Twitter algos. They look for keywords in Twitter and things like that, and trade around it. But anyway, again, I'm sort of going on endlessly here. I'll get back to order flow. The tools I use in this presentation are Orderflows Trader and the Delta Scalper. So again, equities big update. So we'll start in the equities now. Let me get my 10 range S&P chart here. Okay, so again, 7:30-ish time, the market started rallying, boom, 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 up, and this is 10 range, so you got very strong deltas, no red bars, and again, it's, how do you know this move is strong? Well, you're making new highs, but two, for me, knowing that this move is solid is look at the deltas, okay, and compare them to the max delta and the min delta. Okay, in this case, since we're rallying, you should really be comparing to the max delta, and we are closing almost right on our max delta, so it's the strongest delta in the bar, basically closing around. So the final delta 47.68, the max delta was 47.84, 36.04 against 36.04, 66.17 against 66.23, 75.19 against 75.25, 44.42 against 49.01. So, you know, on this move over this hour, it's just all very aggressive buying coming in. You know, people's perception of the market has changed. You know, yesterday we sold off and we did rally back. I did want to see continuation today, and we did get it, but although it was due to different circumstances. But you know, that's how you know this move is strong. You know, you don't get, you know, red bar in here with divergence or anything. We're closing right on our max delta number. And then you start getting up here, you hit this high, you got a divergence, no ratio. Up here you got a ratio, no divergence, because you still got positive delta. But, you know, I remember I was looking at, you know, around this time here, you know, just before 10 o'clock, watching this move up, and then you just sort of stall out in here. And I remember, you know, in the back of my head, and even the guys in the room, I was telling them, say, hey, you know, this looks kind of bearish, actually. You know, you're coming up here. Yeah, you got strong delta 7,000, and, you know, only 4,000, but here you're still going high, but now you got negative delta. Then, you know, on your high, you got a strong negative delta. This bar, even though it's green, you got a negative delta. Here you got, you know, a bearish ratio. Ratio bounds low, so there's some volume up here on the top, even though you got you know, positive delta. Why do you have positive delta? It's because you got a lot of volume being transacted up here on the offer on the high to 2,000, which, you know, if it was just your normal high of like 500, you know, you'd be looking at negative delta. But anyway, you know, you can only trade what the market's telling you, and right now it's telling you, you know, you got positive delta. But, you know, I could infer from it, you know, I could look at the volume. I mean, that's, as your job as a trader, is to analyze something. You know, if something doesn't necessarily jive, in this case, you know, you got heavy volume up here on the top, you got a ratio bounds low, which indicates heavy volume, stopping volume. Then, you know, put two and two together. Okay, so, you know, I could almost take it as a, I don't say synthetic divergence, but I know that the reason we have positive delta is because there was heavy selling up here. But you got, again, you're at highs, so you got, you know, I don't say retail, but you got a lot of, you know, still buying interest coming up into these highs. But there's a big seller up here, 2,000, okay, and it's causing the market to turn. You know, it's holding, I'll say causing it to turn, rather it's holding the market down. And then, you know, so I could almost take a divergence here, but again, it's not there. It's not a real divergence. I'm sort of, you know, extrapolating it. But, you know, then the next bar, you got the delta scalper. You've got, you know, again, a bearish ratio and a strong negative delta. So at this time, you know, I'm thinking, hey, this market can go lower. And then what happens? Nothing. It comes right back up here pretty quick, back down. Yeah, at this point, I mean, Janet Yellen speaking, okay? Should you really be taking any major trades? No, you know, if I was trading here, it'd just be for small size. But again, you know, it's, you know, there's times of the month to trade, times of the month to just sit back and, you know, or trade a different market at this time. You know, that's not going to be so affected on, you know, what she's talking about. But anyway, you know, had you taken the trade, again, you know, at this point, I'm still kind of bearish. You know, we're just hanging around your highs. You got these negative deltas. You got bearish ratios. You've got, you know, selling imbalance. You got delta scalper. But again, it's starting to alternate in here. You know, red, green, red. Then this bar is green. So, you know, when I start seeing, you know, red, green, red, you know, alternating bars, alternating deltas, you know, it's just a market that's going sideways. And we just continue to go sideways. You know, here, you know, we're not going anywhere. Your point of control for the day on the volume profile is just here. You know, earlier it was like at 41.5, you know, during this time. So now it's, you know, we're just going, we're not going anywhere. You know, we're just going sideways, and it's already 11 o'clock. So basically from, you know, 9:40 to 11 o'clock, an hour and a half, you just, you know, basically trading around 39.5, you know, around in here. So it's not going anywhere. You can see that, you know, then, you know, it comes up, comes back down again. So you're just getting alternating bars, and, you know, the market's just going sideways as she's talking. Again, it comes down, you get a red bar, then you get a green bar. Now, another green bar. Okay, so what's this next bar going to be? Is it going to be another red bar? You're just going to go sideways. It's 12 o'clock. She's finishing talking. But then here, look at this. Very strong delta, 6,000, which is encouraging. Here you had 4,000. Next bar was up, then the selling came in. But again, we're a little bit higher here, closer to the highs. Janet Yellen is finished already. And then boom, you hit the highs. You got some stacked imbalances. But again, at this point, it's like we've, it's 1 o'clock. Okay. Do you still want to be in this thing? Can we go higher? Yeah, we can go higher. But how much more? We're going to go higher. 51, I think 51.5 is our lifetime high, somewhere up there. I don't think we're going to get there. Then you get this bar here, just for the cash close. Strong selling, strong negative delta. This move's pretty much over for the day. We're going into the cash close. You're not seeing a lot of buying coming into the cash close. Instead, you're seeing selling. And when you start seeing selling coming in just ahead of the cash close, we're probably going to go a little bit lower. And we do. We get another bar with strong negative delta. And then we close the day, higher on the day, which was good. But, there really wasn't much opportunity on the 10 range chart. Again, I was looking for a bigger move down here. But again, you got Janet Yellen speaking. So any moves you get is going to be kind of muted. Because, no one really wants to stick their neck out. You got the move earlier when her statement came out. Basically her statement, rather, her speech came out. And, once she was talking and the question, I'll say question and answering, but, a lot of grandstanding by these politicians. Everyone's, you still got people coming out and talking smack against Trump when, why? It's, you should be asking questions about the economy, but, anyway, we'll go on to the 4 range. Now, there were some interesting things here in the 4 range. There was 1 or 2 decent trades here. So again, 7:30, boom, that's when the that's when the buying started happening. Boom, all aggressive buying imbalances on the way up. You get up here, 36.5. You got a divergence, no ratio. You just kind of go sideways till the cash opens, and you start rallying again. Divergence here. You get up here to this high. You got a divergence. You got a ratio in the next bar, which just to me is bearish. We sell off a little bit, come back up. Make sort of a halfway, half-hearted move down and sort of come back up again. Excuse me, I got a bit of burping, but this is the thing. Okay, so you got your divergence in your ratio here. So you'd be getting short in this bar. You make a little poke lower, come back up again, and you can't go lower here in this bar than this previous low here, right? You're still about a tick above, so that's not a good sign. If you're still short, you should be looking to cover it at at a small loss or break even if you can. Because, the fact that you started, you rally back up, then, you should get this move. It should happen here. It didn't. It came back up. It starts to make the move again, and it just can't get below this low of this bar here. That's not a good sign. And what happens is the market just sort of gradually works its way up. Then you get to this bar here. You make a new high, a divergence, and a ratio. It starts to come off. This bar here kind of, I'll say, worried me. But, I don't like to get short. And then in the bar I'm short in, all of a sudden turns green and you got a bullish ratio. But what was nice to see was this bar here, this second bar after the high. Where'd you trade up to? You traded right up to the point of control. So now your point of control of this bar is your resistance. I could feel pretty safe on this one. And then we start trading down. And, where's your point of control here? Where we trade right up to it. This one tick below. This one tick below. And you make your move down here. Down to 38. So this is a decent move from 41.5 down to 38.5. And then you just sort of go around sideways. You do get some things here. The stacked imbalance I didn't think was that interesting, worthwhile trading. It would have been better to get it a little bit higher up. I mean, you just had to move from your high, from 42.75 down to 39. It's almost a 4-point move. 38 8 3/4. You know, it would be better to get it up here, but you know, whatever. I just didn't think it was that interesting at this point down here. Then here you got okay, sorry, I just got interrupted there. But anyway, we came down to the swing low here. Very strong positive delta. Delta scalper also given a buy. You know, price rejector also given a buy. Next bar, 3 imbalances. Not stacked imbalance, but you know, it's 3 imbalances in a 4 range bar, which got 5 price levels. So it's quite strong. You know, there's some buying coming in here already, and we start to rally up slowly. 11, 12, you get this swing high, stacked selling imbalance right afterwards. But yeah, again, it's at that point, which is just right around your point of control for the day. So you know, I don't think it's going to be very effective. Then a little bit later, you get 3 in a row right here, 1, 2, 3. You don't get the entry that I'd like. I'd like to get an entry between these 2 point of controls. It doesn't really happen. I want it to happen over the next 2 bars. It doesn't. It still stays above it, and then it just sort of grinds its way higher, higher, higher. You come out, you take out the highs, stacked imbalance. That's encouraging, but then you know, we can't go anywhere. We just go a couple ticks higher in the next bar at 3 3/4. At this high, there's no reason to be selling. Honestly, you got the only thing you got is point of control up near the top. You don't have a ratio. You don't have a divergence. Actually, you do have a divergence. I just off the screen a little bit. Next bar, it's just, you know, it's still there. It's still just sort of hanging around that high. You test the high once, twice. Positive delta, so no divergence, and then you start coming off before you close. So, you know, there was a couple. Oh, there was one on the 4 range chart that really stood out. That ratio and divergence. You know, that was really the best trading opportunity of the day in the S&Ps. Let me take a look at. I'll talk about bonds really quick. Bonds, it was a nice trade. I pointed out in the trading room this morning. And what it was is, after, again, you know, this market really moved after Janet Yellen's came out and released her notes for what she was going to talk about during her testimony, which is standard. You know, then later around 8:42, just for 8:45, you got this bar. So you had your high here, okay, at just after 8 o'clock. You don't got a ratio. You don't have a divergence. But you sell off a little bit, you know, a couple ticks over the next couple bars, some new lows. Then you start coming back up here, and you're making a run at this high, and you got this buying imbalance here. Okay, so you think through what's happening. Market sells off, or hits the high, starts coming off a little bit. You know, nothing dramatic. You know, no big downward moves. Instead, you know, this bar, it opens down here, sells off a tick, rallies up, and then sells off. This bar, we open on our low, rally up. And then here, you get buyers coming. You got this imbalance right here, and it goes 1 tick higher, and it can't hit that high. All of a sudden, all these people that are buying it, looking for this breakout, realize it's not coming in, and then boom, you know, the market sells off, and it sells off pretty quick. There's 3 lots trade here, 285, which is not much, and obviously 0 here. We formed a new bar, and then we just, you know, head lower. I was looking for a move down to 24, which we got pretty quick. You know, this is at 28, 29 in here. And we made the move down below 24 here. This, to me, this was, again, I pointed that out to everybody in the room, that was, you know, as it was forming here. And then we hit this bar here. You know, I gave a webinar the other day, and I talked about specifically this point of control at the extremes. And you also have a bullish ratio. It's a ratio bounds low, indicating stopping volume. And we rally from, you know, the 22, 23 area all the way back up to 153. So there was 2 nice, you know, opportunities here in the bonds, you know, on the move down and the move back up there. Okay, really quick in the crude, very similar to what I explained in the bonds. You know, point of control at the extreme. You have this move up from your low in the crude, from, you know, your low of 45.38. You rally up to 78. Point of control at the extreme. You have a ratio bounds low. You have this red arrow indicating, you know, traders are stuck up here, and what happens? You know, the market sells off. Now in the bonds, you didn't have the green arrow because it was a buy. In this one, you do have a red arrow, which gives, you know, also, you know, puts additional oomph into the trade. But again, you know, I talk about these things. You don't need, you know, some fancy software to look at the point of control in the bar, you should see it. It sticks out, really, really fast. If where's the NASDAQ here? A good example is NASDAQ, right? I don't remember if there was any extreme point of controls, but extreme point of controls on markets like NASDAQ, markets that move around pretty quick, are usually pretty darn effective. Let's just sort of go back here, take it back to cash opening time. I don't think there was, but again, reading what's going on in the order flow, point of control right near the bottom. In this case, you got some heavy volume, 289, 485 there. We shoot up. We do come off later. It's not on the low. And I don't remember seeing any, but anyway, I'll just go through it, see if there was any or not. You get some nice signals here. Delta Scalper gives a buy there. Delta Scalper gives a sell there. Comes right back with a buy here. Really what I'm looking for is just on the extreme. Now, I'm not interested, on a green bar with it at the top. A green bar I want it on the bottom. A red bar I want it on the top, not on the bottom. I mean, it doesn't take rocket science to see that, but and then I'll say the logic behind it, but why it happens is because there's volume there stopping the move. It's nothing fancy. I don't need to analyze the price over X amount of bars or anything like that, and mix it up in some mathematical equation. No, it's the market generated information telling you what's happening. No, I mean, usually in the NASDAQ you're good for 1 or 2 a day. There wasn't anything today. Anyway, and that's the close. The last market I'll talk about is the yen really quick. Well, no, I'll talk about soybeans real quick. Soybeans was a nice market. Soybeans are a great market to trade. It doesn't get the respect as the financial products. What do you do? I'm a bean trader. What are you, a farmer? No. But beans, grains follow order flow really beautifully. It's something you don't have a lot. Well, now today you had the USDA numbers come out, but it's not a market that follows the hot money, the retail money coming in and out. It's something that really is is driven by mostly, I'll say mostly, but there's a lot of institutional playing, and so you got a lot of supply and demand at work, and that's where order flow is really going to help you out. So, okay, 8:30, boom, is the reopen here, and you start going off. Now you had USDA numbers coming out today at 11, so you gotta be careful. So if 9 o'clock you got a ratio. You got divergence and a ratio. You see the market comes off a few cents, rise back up, same thing, divergence and a ratio. Market goes sideways. Okay, it didn't, wasn't a great trade. Then here you get it again, 10:30 now. Now be careful because 11 o'clock fireworks are going to happen. You got the divergence and a ratio afterwards here on this high, and then you sell off. Then 11 o'clock, if you're in a position, definitely be out of it when the reports come out in grains. And again, I don't want to get into what the numbers were, but the demand, the production I think was projected at 4.2 million bushels, but the yield forecast was unchanged. Again, I don't really care what these numbers came out at. Again, I'm just trying to go off my memory here. But anyway, 11 o'clock is when all the fireworks happen. That's why you see all these weird looking bars, because one, NinjaTrader can't keep up with the data as it's being released, and two, there's just no liquidity in there. So there's trading going on, but I'm not really interested in it. I'm waiting for the market to settle down. I mean, there's nobody saying you have to trade it right now because the number came out. No, the people that trade during numbers are generally retail traders. The big money stays aside. They wait for the things to settle down, and then they start trading again. Okay, but again, here, swing high, point of control right at the extreme. It's 11:44. It's 45 minutes after the number came out. It's a nice sell. And then, it's backed up with the price, the Delta Scalper right afterwards. Again, I talked about this in my webinar the other day. Again, you don't need a fancy trading tool to say, hey, point of control is at the top. I mean, yeah, I could code it. Actually, I do have it coded. But again, I'm saying, if you're not using my software, you're using something else, I think, my software is better. But, I do have something that can draw a line there, like this aqua line. And then, delta scalper given a sell, boom. And, from 1034, just shoots down to 10. I don't know how low it got here. And this, well, anyway, you got your next delta scalper buy here at 1028. So that's already 6 cents. That's a nice move. That's like 6 points in the S&Ps. Then you get down here at the swing low, you got to buy with the delta scalper. And it goes back up from, 1025 and a half all the way back up to, the 1029, 29, 30 area up in here. So, there's some nice trades there in the S&P, S&Ps, soybeans. And the last one I'll talk about is Jap Yen. If I can find my chart. And it's just a classic divergence in a ratio, 759. And you get a nice move from, the 87.78 area right on down to, 87, 68. So, it's 20 ticks in the Jap Yen. It's 20, it's half ticks, so it's 10 full ticks, 20 half ticks. But, these are the moves that happen, every day. I talk about them, every day like it's, something new, but it's not. You see these same markets exhibiting the same things day in, day out. I mean, if you're not using order flow, you're really, I think, leaving a lot on the table. But anyway, I drink the Kool-Aid. Why? Because, it's what I've been using for many years, and I know it's good. I know it's, helped a lot of people in their trading, and you'd be kind of, I don't say nuts, but you'd really be leaving a lot of nice trading opportunities out there if you're just using, a normal bar chart and using price-based indicators. I mean, learn to trade. Learn to read what the market's telling you, rather than just, we're crossing this, moving average is crossing this moving average. That's what not moves the market. That's not what moves markets. That's not how the market reacts. People don't sit back and say, oh, well, we're crossing this moving average, let's all get short. No, I said, I've worked in banks for over 10 years. I worked for commodity trading firms for over 5 years. And, I've yet to meet someone that sits there, especially intraday traders that, got all these fancy, I'll say fancy, I don't even want to use the term fancy indicators, but use, MACD, RSI, I don't want to say I haven't met anybody. I've probably met a handful. I could count on one hand. And actually the people that I met that have those on their screen, they're using it because they know how people react there, and they'll just go in and whack them, because they know there's going to be liquidity at those areas. So, they'll either fade it or, get it going in the direction short term to get the move happening. So all these idiots say, oh, look, MACD has picked this turning point. And then all of a sudden it stops, and then, the market goes up in the other direction. So, are big traders using technical indicators? Yeah, they are, but, they're not using it in the sense to help you. They're using it, against you, because they know how the mass, I hate to use the term sheep, but, how about the retail traders look at these technical indicators and react to them. So anyway, again, it's up to you if you want to use order flow. If you're not using it, I really think, you're really leaving a lot on the table. Ask yourself as a trader, are you trading to the best of your abilities? If you think, well, I found the perfect combination of indicators, good luck to you. Good luck to you. Godspeed. But I'll be honest with you, these, this stuff's been mined to death, with, TradeStation came up, even System Writer back in the early 90s, TradeStation in the 90s, people were running, all these permutations of different combinations of indicators, try to find the right ones that work. So if all of a sudden you think you're coming in here 20, 30 years later going to find the Holy Grail, good luck to you. I mean, you might, but the odds are really, really against you. But if you really want to learn how the market trades, how the market moves, then you should understand order flow and understand what you're seeing in the market as it's happening. So thanks for watching this video. Be sure to subscribe to my channel, and thanks everybody. Bye bye.